Good day to one and all. This is Dr. Sivaraman of iknowindices.com. So I'll be presenting Tracking the Forex Market Together webinar part 1. Sorry for the delayed start. There is a technical problem. I'll try to make use of the time and explain to you how exactly the market could be tracked using the live market code page. So this is the echo high. This is the live market code page. So we'll use the live market code page as a simple tool in order to understand how exactly the players intend to make the moves in the market. So before going to that of the details of the live market code page, let me explain to you how the market has to be tracked. So first of all, we try to identify the time taken for each sessions by that of the players. So you know that in US the daylight saving system is switched on. So as a result, you come across the change in the US market timings in relation to that of the players. So 0030 to 7:30 is the Japanese session, 7 to 8 GMT is the gap time, 8 to 13 GMT is the European session. So still daylight saving system is not switched on in Europe, and it is expected by end of this week. So you will come across 8 to 13 is the European session. Afterwards 13 to 13:30 is the gap time. Then US session starts by 13:30 GMT instead of the normal winter time 14:30 GMT. So it is pushed 1 hour ahead. So as a result, 13:30 to 20:30 is the US session. Then afterwards the gap time. So this timing is very important for us to follow in the market, and that you can see in the live market code page as the time, which is the GMT time frame. Now, if you use the live market code page, first of all you have to note down the initial lows and the highs, what they set around 3:30 GMT. In the live market code page, you come across the symbol of the respective currency, the four majors Euro, GBP, and USDN and USDCH of the denominator currencies and the numerator currencies. Then also the commodity pairs USD CAD and Australian dollar, and their levels, current levels, and also what was the high they set during the day so far, and also the low set, and from that of the previous day close, how much of pips it has gained or lost. So gain is shown in green and lost is shown in red. This way you will be able to identify in what way the market is showing the moves of the various majors and that of the commodity pairs. So after noting down the initial lows and the highs around 3:30 GMT, let me show you the slide for the same. Okay. Now you should be able to see the initial lows and the highs set by that of the four majors. Euro formed the low 1.2945 still during the European session, it is not breached, and also the high 1.3048, they have not breached it. But only thing is they made that dip below that of the psychological level 1.30. I gave the forecast this morning during the Asian session, that swing and firm up move during that of the European session, then during Japanese session, followed by that a dip and then rise during that of the European session. So I was explaining to you that you can do a small sell here and buy during the dip, and again take long and try to book profit during the quick rise what you could see during that of the start of the US session. So this is how the trade plan can be done with the help of the expected market moves, what I am presenting in fxtrade.net. So with regard to the lows and the highs, in the case of Euro, they are not breached it, but in the case of GBP, they breached the low by 15 pips. 52.10 has become the new low, whereas 52.25 was the initial low, and they came above that in less than 30 minutes, indicating they made a brief downward stop and before making a rise in the case of GBP. Then in the case of yen, 94.37 and 94.96 are intact and they are not breached it, and they made a small dip up to that of 94.60, and then subsequently they started gaining the levels again. So initially during the start of the European session they made the small dip, but not breached the low in the case of euro, but only breached the low in the case of GBP by 15 pips. Then in the case of CHF, 93.54 was the initial low and 94.34 was the initial high. They are not breached it. And in the case of Canadian dollar also, they breached the low. 1.0221 was the initial low, and they breached it briefly to form 1.0212, and 1.0236 is intact. And in the case of Australian dollar, 1.0433 the initial low, 1.0461 was the initial high. They breached the high and formed the new high, 1.0472, still holding above that of 1.0461. So what do you understand out of that? So when they just make a brief downward move below that of the initial low and come above that of the initial low and stay there for more than 30 minutes, it is a stop and move. So they have made that brief stop and in the case of US GBP on the lower side and come above that of the initial low, 1.5223, and in less than 1.5225 in less than 30 minutes, and then they are staying above 1.5230. So when they, after this downward stop, and if you try to take a buy, when they sustain above that of the initial high for 30 minutes, then you will continue to see the rise. So let us take a trade for this. I'll explain the type of moves afterwards because there is lapse of time. So in the case of euro and GBP, we will try to take a buy. Euro, I'll try to take a buy. 1.3008, and then we have to decide upon the entry stop. Entry stop should be always 30 pips below that of the market, and the exit can be near that of the high, 1.3048. So initially we keep the exit around that of the high, then subsequently when the going is good, then we'll try to keep stop at entry and remove the hedging order or the entry stop, then subsequently move the exit level or the sell level higher and also trail the stop in that of the buy position, so that if they hit the buy, if they hit the stop near that of the buy, then we'll have a minimal profit, and if they continue to rise, then we will try to maximize the profit. So this way we try to enter into the market after making when they make the initial downward stop, and which is evidentially shown in the case of GBP. Okay. Now in the case of euro, they are not breached the low, but they made the small dip, so that we have taken a buy. So GBP we will try to take a buy. 1.5230. $1.5200 as the limit, entry stop, and 1.5260 is the initial high. So we will try to keep. It made a dip in the case of euro. It was not refreshing, sorry. So we have stop 1.5200 entry stop, and then in the case of the crosses, the yen crosses or euro GBP we can take. Now they are just taking the gaining move in the case of euro and negative net change in the case of GBP. So they intend to make a rise in the case of euro GBP. So what you can do is take a small buy and try to book about 30-40 pips profit in that euro GBP, and later on take a sell. So in the case of Euro GBP, once you identify that they are just making the positive net change in the case of Euro and negative net change in the case of GBP, they intend to gain the levels in the case of Euro GBP during the mid session. So 0.8553 we take buy, and entry stop 50 pips below in the case of crosses. So just about 30 pips above that of the market, we'll try to keep the limit order. In the case of Euro GBP, as I explained, that they are making the gaining move in the case of Euro and negative net change, and they are holding it near that of the low in the case of GBP. So that means they wanted to gain initially the levels during the European session in the case of Euro GBP, and then subsequently they wanted to drop it. So we are trying to take up a small buy near that of the 0.8553 and try to see that we are able to book about 20-30 pips profit. So initially we kept the limit, and if they come, if the initial buy makes the profit, we will try to keep stop at entry, and then subsequently when they gain the levels, we will try to trail the stop in that and move the limit order above. So as a result, we will be able to see the market either hits the limit or that of the trailing stop, as then the profit is being realized. That way we'll try to handle the position. In the case of yen crosses, currently you find that Euro yen, as you see that Euro is gaining the level with 22 pips positive net change, and USD yen is also gaining the levels with 26 pips positive net change, and so we'll try to take a buy in the case of Euro yen 123.28 with a entry stop of 50 pips, then exit near that of the high 123.86. Now, see, I had taken some positions in the case of crosses, especially one European cross and one yen cross. Besides, I also taken the position in the case of the majors Euro and GBP, because I am going to present the second part of the webinar between 11 and 11:45 GMT. So I wanted to show during mid session how exactly the crosses can be traded. That is why I had taken the position in major as well as the crosses, and then I will come to that of the explanations now. So I explained to you that we note down the initial lows and the highs. I showed the slide during the Japanese session. I noted down the initial lows and the highs around 3:30 GMT, and also shown the net changes. So what happened? Only in the case of GBP they made a brief downward stop, and in the case of Australian dollar they cut the high and staying above that of the high. 1.0461 was the initial high, and they are still staying above that. We can do a technical trade of buy above that of the initial high and try to maximize the profit during further rise in the case of Australian dollar as a technical trade. So when you see that they cut the initial high and stay above that high for more than 30 minutes, that indicate that whoever has taken the buy position at the lower level were given the profit booking opportunity. That means the short sellers alone are trapped, and the short sellers were not given the profit booking opportunity. So the players intend to make further rise, so automatically the short sellers will be the first one to come and buy at the higher levels after the rise. Similar to that of during the drop, the long holders will be the first sellers after the drop. Similarly, during the rise, the short sellers will be the first one to come and do the short covering. So they know very well how exactly the traders could be trapped on the lower side as well as on the higher side, and for that they do the consolidation and make quick rises in the market. So we need to read in what way they intend to make the moves. So one method is using the algorithm, and it is a proprietary algorithm with which I am deriving the expected market moves for the day. Anyhow, I am displaying it in fxtrade.net. there the expected market moves for this particular week on a daily basis. I just displayed it. You can follow it as a reference or the indication what could be the possible moves in the market. Then subsequently, you try to identify the initial lows and the highs and see whether it is a stop point. I have shown you an example of GBP making a stop point below that of the initial low and coming above that in less than 30 minutes. Then a false move is the one. In the case of Euro, they just made the dip and started gaining the levels, but they have not come up to that of the low. It was only a swing. When they come up to that of the low and reverse in less than 30 minutes, then it is referred as a false move. Extended move is the one which happens more than 30 minutes up to 2 hours. Then they just breach the initial low and stay below that of the initial low for more than 30 minutes and start making the further drop for 2 hours and then reverse the market. That is referred as extended move, and during all the extended moves will be quick moves. A knee-jerk reaction will be seen. Quickly they will make a drop and reverse it slowly after holding for about 1.5 hours. So that they have not done it today. The intentional move is the one they continue to cut the high or the low every 30 minutes and make the rise. See, now you come across in the case of Australian dollar, intentional move. They just cut the high, 1.0461 was the initial high, and then subsequently made 1.0468, then 69, 71, 75, and 78. So slowly they are cutting the high and taking it higher and not dropping it. So you know that I have informed many times that the commodity pairs lead the rally and lag behind. So that's what happening in the case of Australian dollar. So they intend to make the rise slowly as an intentional move, which is evidential now that they continue to cut the new high every 30 minutes. Then you expect the rise for 2 sessions and the start of the 3rd session, and only then they will reverse it. So they started the rise above that of the initial high during European. So they will continue through that of the US session, and tomorrow during the Japanese session start, they will make one upward stop and then start the reversal move. And the reversal will be always an extended move quickly on the downside. If the rise is on the upside, then the extended move will be on the downside. Rise, if they make slowly cutting the new highs, for 2 sessions and start of the 3rd session, it is an intentional move. Then an intentional move will be always alternated with that of the extended move for 2 hours. So I can now tell you today they will gain the levels in the case of Australian dollar during the European as well as the US session, and tomorrow during start of the Japanese session they will make one upward stop and start making a quick drop for 2 hours in the case of Australian dollar, and then start making slow rise again from that of tomorrow European session. So you can just check up tomorrow whether this is happening or not. So if you read the type of moves, then it is very easy for you to predict what they intend to do it. And I have been seeing it for the past 18 years, and they never changed the type of moves what they have done, even though I have been talking openly in webinars. So that indicate they have no other alternative other than doing this. Only thing is, every time they use a different story for us to follow, and then we really get confused what has to be done. Because we go with that of the stories like Cyprus crisis, Greece crisis and things like that, instead of trying to identify the type of moves the players make it from time to time in the market. Why they make different types of moves? Depending upon the traders whom they intend to trap, and depending upon the traders' open positions in the market, they try to make the moves. So they know very well when they continue to drop, the traders become bearish. So they try to create the market sentiment. When the traders freely sell during the pullback on the rise, they initially make a dip like today, what they had done it during early part of European session, and then subsequently they will reverse and rise it. Those short sellers will, if they don't stop out at entry, they will try to do the short covering or averaging to start with during the rise, and then subsequently come for the short covering. They know very well the traders' psychology and the attitude of the traders. So they are able to easily trap the traders by making such moves. And when Australian dollar is making the rise, everybody will expect euro and GBP to do it. But at this moment, they are handling the crosses of Australian dollar by gaining more levels, and then followed by that euro and GBP will also make the rise. So ultimately, what we need to understand, which pair they intend to make. So a currency pair which is making more positive net change is expected to make the first upward move, followed by that of, so today Australian dollar, then followed by that of euro, then you come across GBP among the numerator currencies. And among the denominator currencies, they just made the dip in the case of USD CHF, and also they made the downward move below that of the initial low 1.0221 in the case of Canadian dollar, and they come below and staying below, so they intend to make further drop in the case of Canadian dollar and rise in the case of Australian dollar. If you refer both, you can see that Australian dollar they gained more when compared to that of drop in the case of Canadian dollar. Similarly, drop in the case of USD CHF. So it is not that corresponding moves they will make, they make it differentially. As a result, they are able to handle the crosses. So if you are having any questions, you can ask me the questions. I will try to answer to those questions. And probably there is not much time to explain about the hedging. Yeah, I think it is already 10. The next webinar has to start, I suppose. So I'll come back by 11 GMT and take up the next webinar. And during that time, I'll explain the various other type of and the type of moves and how exactly the hedging can be used effectively to do the trading. So these are all the current positions at the moment taken, and I'll explain to you by 11 GMT what could happen to these trades. What happened to the trades, I will try to show it, and also how exactly I handle those positions, if it is hedged or not hedged, etc. So that you will be able to understand with a live example how a trade setup has to be made, and subsequently how exactly we can do fearless trades. So I'll present part 2 of tracking the forex market together webinar between 11 and 11:45 GMT, and also review the mid-European session, the high, low and the net changes in all the 4 majors and 2 commodity pairs. And you can also track simultaneously the market in my absence from 9:45 to, or now from 10 to 11 GMT, 1 hour, and I'll come back by 11 GMT and present the next webinar, part 2 of tracking the forex market together, and explain more in detail about the type of moves, and also how exactly the hedging can be used, and how the forecast guideline can be used to take quick trading decisions. Thank you one and all. See you by 11 GMT during part 2.